Are you also tired of your market structure shifts failing or your change of character failing? Well, that is a very, very normal concern amongst ICT or SMC traders, which is exactly why I'm going to cover exactly how to identify the high probability market structure shifts and learn how to pick apart the bad ones from the good ones, because I personally believe that a lot of the market structure shifts that you are trusting are the bad ones. The market structure shift is really important for a lot of traders because a lot of traders are using it to spot trend reversals or market reversals. Therefore, I think it's crucial that you guys know how to pick apart the good ones from the bad ones, which is exactly what we're going to do in this video. So without further ado, let's jump onto the charts and let me show you exactly how you can find the good market structure shifts. So to make sure that everybody is familiar and understands exactly what a bearish and bullish market structure shift is, we are quickly going to go over it by looking at a few examples. Now, everybody will tell you different things. I'm going to show you exactly how I was taught to look for the market structure shift, because there's 1,000 ways that people can identify these. This is what I think works. This is how I was taught to identify them. But still, these are not the highest probability market structure shifts. But I want you to learn the fundamentals of market structure shifts before we go into learning how to identify the good one. Right here on the screen, there's a perfect example of a bullish market structure shift followed by a bearish market structure shift. Now, the reason why this is a bullish market structure shift is because it is an up close candle, meaning that this is a green candle. And when we're looking for a bullish market structure shift, we want the candle to be green. So this is a green candle, and it's a swing high. Now, the way we identify a swing high is simply by identifying whether the high that we're talking about is the highest of the two candles next to it. So right here, this is the high, which is higher than this one, and this is the high that is higher than this one. So that is a swing high, and it's a green candle. As soon as we get a candle closure above that, that is a bullish market structure shift. Now we come up, we sweep buy side liquidity up here, and now we form the bearish market structure shift. Right now, when we look for a bearish market structure shift, we now want that candle to be red. We also want it to be a swing low, but we want it to be red. So right here is a down close swing low, right? We close below it with this large displacement candle, and that right there caused the bearish market. So this right here is the basics of the market structure shift. This is exactly how I was taught to identify the market structure shifts, and that's obviously what I'm going to teach. But I don't personally believe that these are the high probability market structure shifts. I'm going to go into why, and I'm now going to teach you how I personally identify the high probability market structure shifts. So here is a picture perfect example of what I like to identify as a high probability market structure shift. To understand why I think this, you must understand what an intermediate term high and an intermediate term low is and what it stands for. So in this example, I'm going to use an intermediate term low as our example. So looking at this picture right here, you would probably, based off of what I told you in the previous clip, assume that this right here is the market structure shift, because that is the first down close swing low that we close below. Now, you would be absolutely right, because that is exactly what I just told you. However, I also said that it's not the highest probability market structure shift, because the highest probability market structure shift is actually this one that we have right here and not this one. Now, the reason for that is because this is an intermediate term low. Now, when we refer to an intermediate term low, we are actually talking about the low that filled an imbalance. So we have a fair value gap right here. This low that we put in, which is also a swing low, and it's also a down close candle, but it's a swing low that filled this entire fair value gap, meaning that it wicked down all the way through the imbalance, rebalancing the imbalance, and then creating a swing low. That is what we identify as an intermediate term low. Now, these intermediate term lows and intermediate term highs are basically protected highs and lows, meaning that if the market is truly bullish in this case, this low should ideally not be swept, and it certainly shouldn't be close below. The same goes for intermediate term highs. If the market is truly bearish, those highs should ideally not be swept, but certainly not closed above. So if the market is really bullish, intermediate term lows should hold. The market is really bearish, intermediate term high should hold. So a candle closure below an intermediate term low obviously indicates that the market is not truly bullish, and therefore make it a way higher probability market structure shift. Now, not only that, but with intermediate term lows and intermediate term highs, you almost always get a candle closure below a fair value gap as well as the low, because it's a low that filled an imbalance, but it didn't close below the low, as you can see right here. But the candle which created the high probability market structure shift right here closed below this imbalance at the same time, which is also a bearish sign. So we're breaking an intermediate term low and we are violating a bullish imbalance. That right there is the high probability market structure shift. Now I'm going to show you some examples of an actual chart so that you can learn to identify this in real price action. So here we have a beautiful live example of the E-mini NASDAQ. Now, most people that I know from social media would tell you that this right here is the market structure shift. And a lot of people would actually trust this as their market structure shift because that is what they were taught. Now, let me show you exactly what happened to the people who trusted this as their market structure shift. As you can see, so far, this market structure shift has not been very valid, right? Because if that market structure shift did in fact hold, we shouldn't see a move up like this, right? Now, what did we learn here though? What can we see now? Well, we see a 5-minute imbalance right here. And what do we have with this large bullish candle here? Well, we have a swing high that's also an up close swing high that also filled an imbalance, right? So we have the typical market structure shift that I just taught you about in the previous clip. But we also have an intermediate term high. Now, this is exactly what we're looking for. This is exactly how we want our market structure shifts to look. So a lot of people who don't know anything about intermediate term highs or intermediate term lows would have trusted this as their market structure shift. But now let's see what happened to those people when I play this chart. And as you can see, this market structure shift obviously failed to hold. But this one, however, which is the intermediate term high and the one that I'm saying is the higher probability market structure shift, actually held very nicely. And you would have been able to get a very nice trade-off during this entire move up. Now, another thing that I want you to pay attention to is this. A lot of people would have thought that this right here was a beautiful ICT unicorn model. And it looked like it would have worked for a little bit, but eventually failed, right? Now let's pay attention to our market structure shift and see whether this is the real breaker or not, right? If I draw it out here, notice how this large breaker still held very, very beautifully. This was the real breaker because this was the real market structure shift. So with this large bullish candle that closed above, validating this breaker, pay attention to the middle point of that breaker and how price reacted to it. That is just a clear sign that this right here was the true breaker, and that is exactly what sent price higher. So after watching this video, I don't want you to be taking these sloppy market structure shifts. I want you to wait for these to appear. Even though they're not going to appear as often, you're going to have to be a little bit more patient. But I promise, once you start implementing this, you will see changes in your market structure shifts. Here we have another example. It's a little bit different, but it is still a very, very good example. So let me show you. We're here in the NASDAQ. Now, this also works just fine for forex. I'm simply utilizing the NASDAQ because that is what I trade myself. Now, what I want you to pay attention to here is that this imbalance here got filled with this candle, and then with the next candle here, this became a swing low. Now, this right here is an up closed swing low. So based off of what I taught you about the regular market structure shifts, this right here, a closure below here, wouldn't be a valid market structure shift because we're looking at a bearish market structure shift and it's an up closed swing low. And what I said before was that it had to be a down closed swing low. But with these intermediate term highs and lows and utilizing those as your market structure shift, it does not need to be a down close swing low for a bearish market structure shift or an up close swing high for a bullish market structure shift. It simply just needs to be a swing low that filled an imbalance. Now, the reason for this is the intermediate term lows are still valid no matter the candle color. That does not matter. So when you're looking for these high probability market structure shifts, it does not have to be the same color, right? The color doesn't matter when we are looking for intermediate term highs and intermediate term lows. So with that in mind, let's see exactly what happens when we close below that. So with this candle right here at 2 p.m., we closed below this intermediate term low. Now, a lot of other people would have looked for their market structure shift somewhere up here, and that in this case obviously would have worked. But again, we are here to play it safe, and then let's see what happens right after we got this market structure shift right here. Now, notice how we sell off. The market structure shift looks like it's working, and now if we trusted this intermediate term low to be our market structure shift, that means we would also trust that to be a breaker. Now, if I mark out that breaker, let's see what happens to that breaker. If I'm going to go short from here, put my stop at this high, and then target the sell side liquidity down here, let's see what happens. And as you can see, because we trusted this as our market structure shift, we also trusted this as our breaker block, and that would have worked just perfectly. So again, could you have found a market structure shift up here? Yes, you could. Could you have used this as your breaker? Yes, you could. But if you wanted the high probability market structure shift, you would wait for an intermediate term low to be created and then a closure below that intermediate term low to identify a high probability market structure shift. Because like it or not, these ones up here are going to fail way more than this one here. Now, this one will not appear as often as these ones will, but I guarantee you this has a very, very high chance of working. And again, why is that? Because these intermediate term highs and intermediate term lows are protected highs and lows. So in this case, if the market was truly bullish, this one should not be closed below. So as soon as we close below it, what does that indicate? Well, that indicates that we're not truly bullish, right? We also look at the imbalance. What did we do to that bullish imbalance with the closure below that intermediate term low? Well, we also closed below this imbalance here, creating an inversion fair value gap, which is also a bearish sign, right? So at this moment in time, we are holding bearish PD arrays, we are violating bullish ones, and we just violated an intermediate term low. We have a lot of confluence telling us that the market is now bearish, which is why we can trust this breaker to work and why we can trust this market structure shift to work. Thank you a lot for watching this video. I now hope that you are more confident in your market structure shifts. And I promise you, if you start looking for these, your market structure shifts will have a way higher strike rate. Now, they will not appear as often as the other ones, but I guarantee you, if you have the patience to wait for the intermediate term highs, intermediate term lows to get created, and then closed above or below, your market structure shifts will change. So again, thank you a lot for watching. If you're new here, please don't forget to subscribe if you liked the video. Thank you a lot, and I'll see you in the next video.